again, this is Josh Alballero with Ayugo, the creators of Ayugo Tax, the application that will change the way you file your taxes. Say goodbye to your tax preparer, complex applications, and most importantly, say goodbye to fake-free and upgrades. If you find this show helpful, don't forget to like it or leave us your comment, subscribe to our YouTube channel, but most important, leave a request for a specific topic that you'd like us to cover in the future. This is episode 4 of Taxes Are Simple, and today we will talk about the Earned Income Tax Credit. The Earned Income Tax Credit, EITC or EIC, is a benefit for working people with low to moderate income. To qualify, you must meet specific requirements and file a tax return. The Earned Income Tax Credit reduces the amount of taxes you owe, and it may give you a refund. Once again, to qualify, you need to file a tax return, even if you generally are not required to do so. You also have to have earned income within a certain range for your filing status, and either have at least one qualifying child or meet the requirements for workers without qualifying children. First, let's figure out if you at least have one qualifying child by answering some simple questions. Number 1, the relationship. Your son, daughter, adopted child, stepchild, foster child, grandchild, brother, sister, half-brother, half-sister, stepbrother, stepsister, niece, or nephew. Man, that was a lot. The next question to answer is the age. At the end of the year, was this child younger than you, younger than 19, or younger than 24 if a full-time student? Remember, there is no age limit if your child was permanently and totally disabled. Next is the residency. The child must live with you here in the United States for more than half of the year, which means that you pay for more than half of the living expenses for this child. The last thing is that the child cannot file a joint return for the tax year unless they are only reporting income earned but no credits. Only you can claim that credit. If you're filing together, you, your spouse, and all listed qualifying children must have a valid Social Security number. Also, you are not eligible to take the Earned Income Tax Credit if you are filing under the status married filing separately. The amount of credit depends on your earned income, filing status, and whether you have any qualifying children. Remember, the new tax law didn't change the Earned Income Tax Credit. However, the earned income amounts and the phase-out amounts are always adjusted annually for inflation. Taxes are simple. Now let's figure out how the credit works. To qualify for the Earned Income Credit, first, you have to answer 3 simple questions. What's your filing status? You have qualified children? And are you below your income threshold for your filing status? Let's take a look at single or head of household taxpayers. If you only have one qualifying child, your income cannot be above $40,320. If you have 2 qualifying children, your income cannot be more than $45,802. If you have more than 3 qualifying children, your income cannot be more than $49,194. As with any credit, married filing jointly couples receive the larger benefit. So a couple filing jointly with only one qualifying child can earn up to $46,010 and still qualify. A couple filing jointly with 2 qualifying children could earn up to $51,492 and still qualify. A couple filing jointly with 3 or more qualified children could earn up to $54,884 and still qualify. Taxes are simple. Now let's figure out how much earned income credit you could potentially receive. The maximum credit goes from $159 to $6,341. Remember that every year the IRS changes these numbers and they increase or decrease based on inflation. One of the biggest misconceptions is that the more children you have, the more you will receive. But remember that this credit is for families with low to moderate income. So those families with 3 or more qualifying children that are way below the income thresholds are the ones who are going to receive the maximum amount of credit. It's that simple. No tricks, no magic. In the next episode, I will show you how most tax pros enter this information in the system. And the IRS approved software does all the calculations. You could do this yourself and save yourself a bunch of money. But most importantly, understand how simple taxes are. If you like this video, share it in your timeline now. Goodbye. We'll see you next time.